Okay, so we're going to start off here with NU, and I had this question in the week. Um, why did my stop loss get hit when I took a sell? Well, if the person that asked me that question was following the order flow on NU, uh, on the daily chart, we can clearly see that from basically all the way at the bottom over here, we were bullish, and our last bullish order block, which was this one over here on the daily chart, would have been our breaker. So this is the last bullish order block before the move up. So someone said to me that why is this order block over here not a bullish order block? Well, it's quite simple, really. So if we zoom in here, we can see that a order block is only an order block, and it's not an order block because although this candle, this green candle, engulfs the body of this black candle, so this bullish candle engulfs this bearish candle, this is not a valid order block. It is not actually an order block at all. It is a bearish order block to the downside, actually, not a bullish order block, because a bullish order block requires a move to the upside. So we can see here we have a bullish order block. Here we have a bullish order block. It's 2-day bullish order block. Here is a 3-day bullish order block, and here is a 1, 2, 3, 4, 5, 6-day bullish order block. So this is a strong order block, and when price comes to this level, we will have reaction. So on the daily time frame, we can see that NU is still bullish. So this move to the upside has not had another bullish order block until this one over here. And we can see that this bullish order block was gapped down. So we know that a bearish candle closes below. Okay, now keep in mind this was actually a weekend gap, and we don't include that as part of the strategy, because if we did, well, then we would have a very volatile and difficult market to read. So this is also a bullish order block, and you can see that price has contained itself in here. And if we look at the 4-hour on that same level, we will see clearly where price gap down over here, right here, price gap down. That was a weekend gap. So that is not a reason to see that there was a change in order flow. So this is still bullish because this order block here is still very strong, and this daily order block is very strong. So we have bullish order flow on the daily chart. Okay, so on the daily chart for NU, the order flow is still bullish and maintains to be bullish until we have an order block that is reasonably strong that is broken. So this gap down, we could say that on some brokers, this potentially could be a wick of price coming down over here. It would really depend on your broker over here. We can also see at this level here that this is also an institutional price level of 6,400 over here, like that. And we can see that price reacted off that zone after closing some of this liquidity void on this daily chart, and price rallied up. Where did it rally into? Well, it rallied into this daily bearish order block over here. So price is now reacting off of this zone over here. So this is a zone where price is still reacting. Okay, now someone else asked me, well, this is a bearish order block. Okay, yes, that's true, but we also have a bullish order block that has not been broken over here on the daily chart. Okay, so here we have a daily bearish order block, and we can see that when price first came into this daily order block over here the first time, we had reaction down, and again when I tested it again, we have reaction down. So we can expect reaction down, but this daily order block inside of this area here needs to be broken so that we can look for longer sells to the downside. So let's for a second forget this one because price has not come near there yet. So we are trading inside of a range for a few days now, we can see, and we can expect reaction off these levels. Okay, so that is the daily view on NU. We are bullish from this order block and bearish until broken from this order block at the top here. So price needs to close above this order block for us to even think that this is going to be continuing bullish. So we are bullish from this order block and bearish from this order block. So let's look at the 4 hour, and we can clearly see that here is our daily order block, and on the 4 hour, this in red, I'm just going to mark it up as red, we can see was the last bullish order block before the move to the upside over here. So when price traded through this order block over here, this order block becomes our breaker block. So we can see when this breaker block was created, price came down, came back up and tested our source at the top over here. And when price tested our source, you can still see it closing below. We also have a bearish order block over here. We just move this to the left, and we can clearly see that we also have a bearish order block over here. And price came into that order block once the breaker was created, and then price rallied down. And we can see another order block created over here on this green candle. Took 1, 2, 3, 4 candles to create that order block. It is still an order block nonetheless, and price then fell from that level, creating ourselves another order block over here. So when price fell, where did it fall into? Well, we have a 4 hour bullish order block sitting over here at this level, and we can see how price respected this order block over here. So if we zoom in here, we will see that when these order blocks were created, and we are following now the bearish order flow on the 4 hour once our breaker was created, we also have not yet this daily order block created, but if we were following price previously, we will see that we have another break in market structure over here, because this was the next breaker. So this green candle was the this green candle over here was the last bearish order block before our source was created, and we can see that price traded through that into our other order block, into our daily order block, and rejected that bearish order block. But we can see that although we had a gap down, if we just move across here, you will see that price was contained inside of our breaker. So we can see it tested price when it came into this bearish order block over here. Price rallied down, and this large gap over the weekend created this daily order block over here. If we see that large daily order block over here was created over the weekend from Monday, and price rallied up. Where did it rally into? Well, if we pull our previous bullish breaker across, we can see that price here is our last bullish order block, creating our breaker when price broke through it. And we can see that price tested our breaker and is currently still inside of our breaker. Okay, so the order flow changed from bearish to bullish using our institutional order flow strategy, and price bounced off of our daily order block, creating our breaker. And also we had a daily order block created, a 4-hour order block sitting over here. Price rallied up, and basically this whole week it either consolidated and then pushed up into our breaker. So we know that we have a source from this previous peak formation high, and price likes to test our source and our breaker, but until our source is broken, we can say that we can look for sells over here if we are not already in a buy to this upside movement. If price respects our source, and if we look for other confirmations, if we can see here, we pull our fibs down to the lowest low over here. So here is the body over here on the 4-hour of the peak formation high to the peak formation low over here, and we can see price is currently trading inside a premium discount array over here. This is premium because you sell at a premium and you buy at a discount, so this is a premium selling price. So we have additional confirmations such as also these order blocks over here if we pull them across. So there is some selling pressure from these order blocks, but until our source is broken, we can look for sells over here, and we can see on this move to the upside, there's additional fair value gaps over here. There was a fair value gap actually here that had closed, price touched over here on this level and only went down about 20 pips. So that was someone's trade that they sent me, and they got taken out at break even because price failed to go lower, and there was a breaker over here sitting here. This yellow block is our breaker, and price broke through, testing our breaker, bounced off and rallied up. So this daily order block, our breaker, these 4-hour order blocks are strong confirmations for a sell, but we also have a reason to buy if we were at the bottom over here. So it's currently trading in a tight range, and we need to see a sort of a break of structure either above our source or above or below our source at the bottom here until we can see a large trend either to the upside or to the downside. Okay, so that's NU for you. And if we take a look at GU, so GU was basically ranging as well. And if we follow the order flow, we will see that over here was the last bearish order block before the peak formation low. Okay, so this was the last bearish order block over here before we created ourselves a source over here. So if we pull this across, we can see that that was broken. So this becomes our daily breaker using the institutional order flow strategy. So here is our daily breaker. Price traded up. Where did it trade into? Well, the same can be said that this was also a breaker over here. So this order block here was the last bullish order block before this moved to the upside. Price traded through that order block, so we had a breaker. We can see price came into that breaker and fell down. Where did it fall into? Well, there was a bullish order block over here in this area of price, and you can see if I pull that across, price respected this daily order block over here, and also we have our breaker over here, and then at the bottom we have our source, but price has not gotten below to our source here yet. And we can see that price has not traded below our source. So on the daily, we are still bullish because price has not broken those areas of price like it did over here on the breaker. Okay, and we can see if we just look at this area of the chart over here that this is still a liquidity void sitting here where we can see that price has not come into this zone of price. So we can expect at some point in time for price to come in there and take up that liquidity void so that they can buy. So someone asked me that when they pull fibs for a bearish scenario on the daily chart of GU, they did it from body to body on the daily chart and they saw the same thing. Well, that is correct because when price fell down and retraced back up, you will expect to sell at a premium price. So that premium price was the 79%. And also our breaker is at this zone. And if we look here, price traded into perfectly our fair value or liquidity void sitting at this level over here. So that is why price came to that level. And also, this was the 79%, obviously, we can see here. So this was a premium premium array for price to fall from that zone. So the same can be said when you pull your fibs from a bullish scenario. So this was the last peak formation low to the peak formation high, recent price. And we can see on the daily chart that when price traded down from the premium selling price, it traded into a perfect discount price of our OTE, which is 70.5% retracement, and our 70.9% retracement. So there was actually multiple confirmations for us to buy at this level because there was a daily order block sitting here. We had our breaker, and also we can see that our fibs is telling us that this is a discount price and we can expect institutions to buy from this level over here. Okay, so I'm just going to clear this up and we can just go down to the 4-hour chart. And if we look from recent price action, that over here, when price fell from this area, if we follow our strategies, we can see that what is here is a bearish order block sitting over here. So that is why price fell from this position. Okay. Someone else also pointed out, I think it was on the group, that when they pulled their fibs, they pull their fibs from the peak formation of this area of chart to this area of chart. Now that is correct, you can do it like that, and they got a 62% bounce, and which gave them additional confirmation as the reason to sell over here. Okay, so there was also additional confirmation to sell from this area because we have a liquidity void sitting at this zone over here, and we can see that price filled some of that gap, about 50% of it, and when it filled 50% of this liquidity void, price then rallied back up. But if we look on the 4-hour perspective over here, we can see additionally that there is another fair value gap sitting over here on the 4-hour chart. So when we see price going above here, and there's obviously a point of liquidity sitting above this high over here, because you can imagine the buy stops for breakout traders or the stop losses for retail traders who sold over here. So the same can be said over here. Now this becomes a point of liquidity because price has not gone above here yet. So the same can be said over here. That is a point of liquidity. And point of liquidity likes to be raided. Again, over here, there's another point of liquidity sitting over here because there was a large move to the downside. And what does retail traders teach each other? Well, basically, you put your stop loss above resistance, and that's exactly what happens. And price raids those kinds of areas, as we can see over here. So this was a point of liquidity for this move to the downside. And when that point of liquidity over here was raided, we can see a big move to the downside because the institutions do not want to take retail traders with them. So that is why price fell from that position when it was raided. And also if we see here that that was a bearish order block at this level, and that is why price fell from this specific level. So if we look, and history likes to repeat itself, that if price continues upwards here and wants to take out liquidity instead of going lower on the Monday open, well, then we can expect for this gap to be closed over here and these 2 points or 3 points of liquidity to be taken out, and then a possible move to the downside. There is also, if you look on the daily time frame, a small fair value gap over here, but it is really small. So if we look on the 4 hour, there's actually no gap in price. So it is unlikely that price will come to that zone. I would rather see price taking out these points of liquidity and then taking a move to the downside. Okay. Nikhil, you have a question.
Yes. What about the liquidity void down?
Yes, so like I say, that this is obviously an area of interest over here. So we can see that there is additional area of liquidity or a liquidity void sitting over here, as you pointed out. But yes, price will at some point close these gaps. But when the market opens, whether it gaps up or gaps down, we want to see a thrust of movement in price to one direction, because when the market opens and we want to see price pushing up here, we can expect this kind of move over here. But what we can also see is a move to the downside. And when price comes back up from these liquidity voids, then we can expect a bounce. Okay, so we need to continuously see market structure break over here. So here would be another point of liquidity. And obviously, we know in a trending market, we make higher highs, lower lows, or lower lows and lower highs, depending on if you're bullish or bearish. So that same scenario would apply here, where you are making lower lows and lower highs, lower lows, lower highs, lower lows, lower highs. So if we see that same reaction here and we break the area of liquidity, then it's unlikely that price will come back to retest this zone until another point in time. Okay. But there is another factor in the market that we have not factored in, and that is the fact that we are now in July. So July marks the third quarter of the year. So from a perspective of the institutions, the third quarter brings in new money from whether it's investors or banks or governments or corporations. So there is a large influx of money now that we are in the third quarter, because there would be new investment opportunities, countries and governments moving money around for the third quarter. So we can expect a large move on a lot of pairs, especially the majors like GU and EU. Basically, in the next 2 weeks, we should see a large move uh, in liquidity, especially. Hopefully, that answers your question. So yes, we will see these voids filled, but we also need to see a continuous move to the downside, like we know we need to see. And once we see that, well, then we know that price will go lower. But like I said, on the daily chart, price has not broken our order block that we have over here. So this is our order block on the daily time frame that has not been broken. So this was a large move to the upside, and this order block over here has not been broken. Okay, so until this breaks, we can say we are still bullish on the daily time frame for GU. Okay, so I don't want to spend too many hours or minutes on this one particular pair. We can have some questions just now. So similar scenario can be said for EU. So EU, we can see here that it has continuously done a similar scenario over here. We can see that this is a bearish order block on the daily chart over here. And again, this large green candle over here was traded through. So that for us makes another daily bearish order block. And again, over here, this candle, this green candle, is also an order block and was traded through. So there is a lot of selling pressure on the daily time frame on EU. And if we go and look over here, that this order block was also respected previously. So we can see that there is a lot of selling pressure, and we can see that that price over there is the 50% basically of EU, of this large daily order block over here, and then price fell from that position, creating an order flow on the daily time frame for bearish move to the downside. Okay, so now that we know that is our daily, let's just quickly look here. The weekly chart also indicates to us over here that there is a big liquidity void sitting here on the weekly chart of EU, and we can expect price especially to come to this gap over here. So this gap or imbalance of price. So there's liquidity voids, and then there's this imbalance. We can see that there's missing bodies in this area, and we can see missing bodies in that area over there, and price likes to fill those bodies. So we can expect price at some point, based on the pressure to the downside, we can expect this to be filled within the next 2 weeks, hopefully, if we continue to see bearish momentum to the downside using our weekly. So weekly indicates to us that we are still bearish because this large order block over here has not been traded through. So this order block here is still valid. So we see reaction from this order block move to the downside. Daily indicates to us also that we are bearish over here. And if we look at the 4-hour chart, we can see that multiple times during this week, we had some good trades on the group with guys catching the fair value gaps on the 4 hours getting closed, and then large moves to the downside over here. So another area over here, when this area was raided recently on the chart, we can see that there was obviously liquidity sitting below over here. And what happened? The price wicked through this support, so this retail support levels over here, and made a run up. Where did it make a run up to? Well, over here, if we look, we can see, I think there was a liquidity void on the 1 hour, a small one sitting over here. Over there, right there was a small fair value gap, and that is the reason for price coming above this high. And we can also know that from liquidity, there was liquidity above these highs over here. So price also raided the liquidity on these highs, closed this fair value gap, and price rallied down. So yeah, some will say that this is NFP news. Well, I don't read news, I don't care about news, but the reason it came up here was to close this fair value gap and take out this liquidity, and then this moved to the downside. And we can see here that there was additional fair value gaps before the market closed on the weekend, and prices basically closed that gap. And if we look on the 4 hour, there is still a gap to be filled. So there is, remember, on the daily chart, large selling pressure. So we can expect this gap to potentially be closed because price is currently trading close to this level. So if we continue our bullish scenario here, we would like to see that price can come and close this gap, and then we can look for a sell. Okay, so that is where I would look for a sell on EU based on what we know. Let's just look at the 1 hour. The 1 hour doesn't indicate to us that there's any other gaps. So the 4 hour is our best bet over here for looking for a sell over here. And this is obviously a 4 hour bearish order block over here, right like that. So we would see a move to the downside from this area over here. And in the case of a bullish scenario, well, if we look on the 1 hour chart, there is also a fair value gap sitting at this level over here in price. So when price comes to this zone over here, we can expect to see a reaction. And if we look on the 4 hour chart, that is also a bullish order block from that zone. So there will be some reaction at this zone when price reaches here based on the 4 hour chart and obviously the 1 hour chart fair value gap. But remember, our daily bias is very bearish because of all of these order blocks that we've had here. Our weekly bias is also bearish because we have a strong order block that has not been broken. And also we have a reason for price to come down to this level, this liquidity void and this big imbalance in price over here. And if we also look on the 4 hour chart, that price basically continued upwards for a while, and there is actually a large amount of gaps or fair value sitting on the 4 hour chart for EU. So we know that EU likes to balance price, so we can expect a move to the downside. And obviously there is additional reason for price to go lower, which is these lows sitting over here that have not been taken. Then there is obviously all the buyers stop losses sitting over here and additional points of liquidity sitting at these lows. So we can expect those to be raided when price pushes down. That would be a reason for price to also push down. Not only do we have those gaps sitting there. So for EU, I want to see price go up into the 4 hour fair value gap that we spotted over here, and then potentially look for a sell inside of either this order block. Maybe it pushes up to the 50% of this order block. If it closes this gap and we see reaction, there's a institutional price level of 800 at the 50% of this order block over here, basically 40-50% of this order block. So if price goes beyond our fair value gap, I want to see another reaction over here at 50% for us to sell down. Okay, so that is EU on the multiple time frames. And then the last pair we have here is USD CAD. So this one's going to be fairly quick. There's not much to it. If we can see on the daily time frame, that has just been a continuous downtrend for quite some time. Since March of this year, price has just consecutively gone down each week. And price over here, this would have been our last area where we had a, so this is not a breaker yet because price is not closed above this area, and that would be our last bearish order block before creating our source at the bottom over here. So until price breaks above this, the daily time frame is indicating to us that price is bearish even now. So we can see when price came to this level over here, tested that daily order block and basically reversed. So someone will tell me, no, that's NFP data. Well, I don't believe in that. That's a order block I can clearly see. And that is why price reacted off of that level over there. And when price comes into the order block over here, and we also have a fair value gap on the daily chart. I want to see a reaction possibly to the upside or a bounce, because we have on the 4-hour chart, if we look at that zone, this whole zone over here, this whole zone that has not been filled, so over here, needs to be filled. So there is also a reason to buy over here, and I want to see reaction off of this zone, not to mention the fact that we also have large liquidity voids sitting over here for price to come into to close above. So I do want to look for buys on USD CAD, but right now we are still selling, and we can see on the 4-hour chart there is additional gaps or fair value that need to be filled. This session is going to time out now. I will create a new one. So price is going to continue low for Ucad, and I want to see a bounce at those levels over there. Next video I'll do will be a Q&A session. So this is going to end now, and I will send a new link in the group for everyone to join back. Just give it 2 minutes and we will be back. Thank you.